Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, November 11, 2025, and here is everything you need to know as the markets close for today. Indian markets staged a remarkable recovery today, ending higher for the second consecutive session with strong buying momentum. The Nifty 50 closed at 25,695, gaining 121 points or 0.47%, while the Sensex rose 336 points or 0.40% to settle at 83,871. Bank Nifty advanced 200 points, closing at 58,138, up 0.35%. The market opened subdued amid concerns over yesterday's Delhi explosion near Red Fort, but demonstrated exceptional resilience, recovering nearly 250 points from the day's low to close at session highs. The positive sentiment was buoyed by optimism over a potential US-India trade deal, the end of the US government shutdown, and reports that UBS projects India to become the world's third largest economy by 2028. On the currency front, the rupee strengthened 16 paise to close at 88.57 against the dollar, hovering near recent lows but showing mild recovery on positive global cues and domestic equity strength. InterGlobe Aviation led the Nifty 50 gainers, surging 3.55% to close at 5,787 rupees after engine maker Pratt Whitney assured IndiGo of replacing faulty engines for 40 grounded planes. Bharat Electronics jumped 2.39% after winning additional orders worth 792 crore. Mahindra and Mahindra rose 2.22%, while Adani Ports gained 2.02%, and HCL Technologies advanced 2.01%, reflecting strength in IT and infrastructure. On the downside, Bajaj Finance was the biggest loser, plunging 7% to 1,009 rupees as asset quality deteriorated with gross NPAs rising to 1.24% from 1.06% year-on-year, despite reporting a 23% increase in quarterly profit. Bajaj Finserv followed, declining 5.92%, while ONGC, Tata Motors Passenger Vehicles and Kotak Mahindra Bank also ended in the red. In mid-caps, Vodafone Idea rallied 7.26% as net loss narrowed, BHEL gained 4.34%, and IndusInd Bank rose 3.58%. Among small caps, KEC International surged 5.64%, while HBL Engineering tumbled over 9%. Nifty 50 tested crucial support at 25,449 in early trade, but held firm, staging a strong recovery that pushed the index above the key resistance of 25,670 and short-term moving averages. The bullish candle with a long lower shadow indicates buying at lower levels. Going forward, immediate resistance stands at 25,850, while support is placed at 25,500 to 25,400. Bank Nifty successfully crossed and sustained above the psychological 58,000 mark, with immediate resistance now at 58,300 to 58,400. A decisive move above could trigger a rally toward 59,000. On the downside, support is placed at 57,700 to 57,600. The Nifty India defense sector emerged as the star performer, surging 2.45% in a single session, driven by strong order inflows and defense modernization momentum. IT sector gained 1.2%, led by Persistent Systems, Coforge, and HCL Technologies, while auto advanced 1.07%, with Bharat Forge jumping over 5% post-strong quarterly results. Metals rose 0.71%, oil and gas gained 0.59%, and private banks added 0.36%. PSU banks were the only notable losers, down 0.39%, facing profit booking after recent outperformance. Realty declined 0.16%, while pharma and consumer durables remained marginally negative. Markets shrugged off security concerns following the Delhi blast investigation, with analysts noting that markets remain resilient to such isolated incidents unless broader geopolitical escalation occurs. Foreign institutional investors continued selling, offloading 4,115 crore worth of equities on November 10, while domestic institutional investors provided strong support by purchasing 5,805 crore. Month to date, FIIs have sold 5,747 crore, but DIIs have absorbed the selling pressure with net buying of 22,483 crore. With SEBI's new F&O rules already in effect since October 1, including revised position limits and intraday monitoring, traders are adjusting to the enhanced regulatory framework aimed at curbing excessive speculation. Crude oil prices slipped slightly, with MCX crude for December delivery falling 15 rupees or 0.28% to 5,326 rupees per barrel amid weak spot demand. Gold prices extended their upward streak for the fourth consecutive session, driven by festive and wedding season demand. 24-carat gold climbed to 12,628 rupees per gram, up from 12,322 in the previous session. Silver witnessed significant gains, with MCX silver surging over 1% to 1,55,369 rupees per kilogram from 1,53,691, hitting fresh highs and reflecting strong safe haven demand amid global uncertainties. The Delhi blast near Red Fort that killed 13 people initially weighed on market sentiment, causing a 0.5% decline in morning trade. However, markets demonstrated remarkable maturity and resilience, recovering sharply as investors focused on economic fundamentals rather than isolated security incidents. The swift response from security agencies and deployment of NIA, IB and Delhi police to investigate under the Unlawful Activities Prevention Act provided reassurance. Separately, optimism grew around US President Trump's comments that Washington is pretty close to a fair trade deal with India, with plans to lower tariffs, lifting investor confidence significantly. The Nifty 50 chart shows a bullish candle with a long lower shadow, signaling strong buying at lower levels and follow-up buying after bouncing from the 50-day exponential moving average. The index is expected to hold above the key support zone of 25,200 to 25,400 and gradually head toward immediate resistance of 25,850, with the recent 52-week high of 26,100 as the next target. Bank Nifty continues trading within a flag formation, maintaining above its 9-day EMA near 57,800. A decisive close above 58,400 could pave the way for a meaningful rally toward 59,000. On the downside, a close below 57,300 may trigger weakness toward 56,800 to 56,500. With GIFT Nifty futures showing mild negative bias and mixed Asian cues expected tomorrow, volatility may persist, but the overall outlook remains constructive as long as key support levels hold. For tomorrow's session, consider a buy-on-dip strategy as long as Nifty sustains above 25,500. Focus on IT and auto stocks which are showing strong momentum, while being cautious with financials after Bajaj Finance's sharp correction. Bank Nifty traders should watch the 58,400 level closely for breakout opportunities. Defense stocks remain attractive on order flow visibility, and precious metals continue to offer safe haven appeal with silver hitting new highs. Stay disciplined with stop losses given expiry-related volatility this week. That's all for today's market wrap. We'd love to hear from you, so send in your questions and feedback. Stay tuned for tomorrow morning's wrap and send in your questions. Until then, trade smart and stay profitable.